Good afternoon, everyone. Thank you very much for joining us today in our session only dedicated for you, where we are going to talk about electronic invoicing, the data dictionary that was recently released by the Ministry of Finance, and the impact on the business. My name is Diana Cáceres, a director at Druva, with extensive experience in electronic invoicing implementations in the UAE, in KSA, and Latin America. So before we get started, I would like to introduce the wonderful team that is joining me today. First, we have Vlad, our indirect tax partner, and Navneet, manager in tax technology at Druva. Please, Vlad, can you please introduce yourself?
Hello, everybody. Good to have you here. My name is Vlad Skibunov, and I'm a VAT partner in WTS Druva. I've been doing VAT for the last 20 years, and now obviously it's an exciting time for anybody doing tax in the UAE because of the e-invoicing. So hopefully you'll enjoy today's session.
Thank you very much, Navneet. Navneet, can you please introduce yourself?
Hi, everyone. I'm Navneet. I am a manager in the tax technology with Druva. My experience has been, in e-invoicing implementation in India, back in KSA. So yeah, hope you guys enjoy the session. Over to you, Diana.
Thank you very much. So before we start, we are going to a few housekeeping rules to ensure we have a smooth webinar today. First, please mute your microphone during the session. If you have any question, please feel free to type it into our Q&A chat box, and we encourage participation. And if you have any question, please feel free to ask. So we are going to, what we want to achieve in this webinar, next, please, is basically three main topics. We are going to define, let's go to the definition, to the basics, electronic invoicing, why UAE is implementing electronic invoicing and different experience in other jurisdictions, impact on the business, and what actions you can do now. Next. So in terms of electronic invoicing, electronic invoicing definition. There is some misunderstanding in the market sometimes that UAE already adopted electronic invoicing. Some people refer to that is when they can basically send a PDF tax invoice through an email. So this is not really what we refer with electronic invoicing. Electronic invoicing is nothing but it's just the digital format of the tax invoice in a structured manner. Most of the countries globally adopt XML. Some countries like India adopt JSON, but the most common format is XML. UAE adopted XML. Paper invoice, PDF invoice, image, Word documents will not be acceptable going forward after the e-invoicing implementation in the UAE. Next. So we see the adoption globally. Electronic invoicing is nothing new. It started in Latin America. The main leaders are Chile, Brazil, and Mexico. In the legislation in 1995, it was already mentioned in the legislation in Colombia, but it was only adopted a few years ago. So we can see now, according to this study from Bilentis, the adoption of electronic invoicing is more and more every year, and is expanding very quickly. Countries are implementing electronic invoicing because they have seen the good results. So we can have some examples of the results in Mexico. Currently, they are issuing 10 billion electronic invoicing, and they are pre-populated VAT returns are 90% accurate. In Italy, according to the OECD invoicing initial findings, in only 1 year, they detected VAT fraud in around 1.1 billion euros. So this is a significant increase of revenue that countries have seen after the implementation of electronic invoicing. Next. Let's go to the main drivers. Why is the UAE implementing electronic invoicing? We can refer to mainly three drivers. First is increased tax compliance, reduced tax leakage, simplified processes for government and taxpayers, and the communication between government and taxpayer will be in a simpler manner. And also the last driver is use the data from electronic invoicing for tax policy and online services. When we refer to new online services, is basically the adoption of e-audit, e-filing, pre-population of certain fields of VAT returns as well, that they will be able to use the data, and also create new tax policies, like they will have a new tax relief for certain sectors, depending on the analysis from the data from electronic invoicing. So these concepts is very much aligned with the recent announcement and a press release from the Federal Tax Authority, where His Excellency Khalid Al-Bustani, Director of Federal Tax Administration, recently said the Federal Tax Authority is intensifying its regulatory efforts to monitor taxpayers' compliance with tax law across all their transactions. It's not only transactions related to VAT, or in this case was excise tax, but it's all transactions across the board. So next, let's go to the implementation and when electronic invoicing is going to be implemented in the UAE. Navneet is going to take us through the implementation, rollout, and model. So Navneet, over to you, please.
Thanks, Diana. So if you see on the screen, it's basically the timeline that has been released by the FTA or the MOF around e-invoicing in the UAE. So recently, the data dictionary was released for public consultation, and the due date for the feedback on it is 27 February. That's tomorrow. So we would encourage every taxpayer out there to have those specific feedbacks ready and send to MOF for to kind of participate and have your voice in the making of the data dictionary. Now, this is going to be followed by the e-invoicing legislation, which we expect in the Q2 of 2025. The legislation will kind of deep dive into what laws will be in place for the e-invoicing regime, what kind of workflows will be in place, and what will be the overall architecture around it. Right? That will be followed by a rollout strategy, which we expect somewhere in December 2025, which will kind of tell which are the taxpayers who will be covered in the first phase or the second phase, and so on. And then which will be followed by the go live date of July 2026. So that's the overall timeline that we are looking at from an e-invoicing perspective in the UAE. I'll move to the next slide. The next slide basically covers the DCTCE model that is being implemented in the UAE for e-invoicing. So if I just take you through the flow that will be there once the e-invoice is implemented. So if you see, there are 5 corners to this model: C1, C2, C3, C4, and C5. So corner 1 is basically the supplier. The corner 2 is the accredited service provider for the supplier. The corner 3 is the accredited service provider for the buyer. The corner 4 is the buyer himself. And then we have the corner 5, which is the FTA and the MOF. Now, how the flow happens is the supplier submits an e-invoice to his ASP, that is the accredited service provider, in an agreed format. The ASP then validates and converts the data that he has received into the UAE standard XML. Once that is done, the ASP then transmits the e-invoice to the buyer service provider, that is C3. And then C3 validates also. Okay, before that, what C2 does, that is the ASP of the supplier does, is also reports the tax data document, that is the TDD, to corner 5, which is the MOF and the FTA. Simultaneously, C3 then validates the invoice that has been sent to it by C2 and then forwards it to the buyer, that is C4. C3 also then reports the tax data document to C5. Post that, C5 confirms the receipt and sends a message level status, that is the MLS, to C2 and C3. And then final notifications are then sent by C2 and C3 respectively to their respective e-invoice users, that is C1 and C4. So while this is not something new, and many of you would have already seen this, what is interesting to note are the 3-4 changes that has come up in the recently published document. So if you see, one of the changes that we see is that there's a requirement for the corner 3 to report the tax data document to corner 5. So that's one new reporting that has come in place. The other thing is, if you see in the corner 5, the words that have been used are collect, validate, and deliver, right? So looks like the FTA is looking at different roles to play. It could be an ambition to do a desktop audit. So as a taxpayer, since granular data is going to be sent to the authorities as part of the e-invoicing, we should clearly know what data is being sent and how it will be used, right? So that's about the overall DCTCE model. I'll move to the next slide. So next slide is around the data dictionary, what data dictionary is. So in literal terms, a data dictionary is something which contains all the data fields that are to be part of the e-invoicing that is going to be done by the taxpayers, right? So as part of the UAE PIPOL standard that has been implemented, the PINT, that is the PIPOL International Invoice Model, has been adopted by the UAE. Now, the PINT basically standardizes invoice data while allowing jurisdiction-specific customizations. And if you see, there are 3 content categories of the PINT model: the shared content, the aligned, and the distinct content. So if I talk about the shared content, these are nothing but business-driven fields, which are common across all jurisdictions. These include fields like name, address, items, prices, and all those things. If we see, almost 80% of the data dictionary is composed of the shared content. If I talk about the aligned content, these are nothing but the tax and legal elements that vary across jurisdictions. This could be like VAT details, the tax registration number, the tax breakdown, and so on and so forth. And the last, that is the distinct content. These are UAE-specific fields, which include unique tax identifiers. For example, in the UAE, we have a data field called invoice transaction type code. So these aligns with the type of transactions that UAE has, which could be around deemed supply, a free trade zone supply, a supply through e-commerce, a continuous supply. So those are the transactions basically covered, and that forms part of a distinct content. So all these 3 together form the overall data dictionary for the UAE. I'll move on to the next slide. So now, as we refer to the UAE e-invoicing data dictionary, the Ministry of Finance has outlined 16 specific use cases that necessitate the issuance of a tax invoice or a tax credit note. The slide on the screen, which you see, highlights the mandatory data fields that have been specified by the MOF as part of the tax invoice. Now, beyond these mandatory fields, there are also certain conditional, mandatory, and optional fields that may apply based on the nature of the transaction. Additionally, there are certain type of transactions which may require certain additional mandatory fields as well. Now, for instance, if I talk about, say, a free trade zone supply, there is a data field called beneficiary ID, which is mandatorily required for those type of supplies. If I talk about a summary tax invoice, there is a data field called invoicing period, which is mandatorily required for a summary tax invoice. So based on the type of invoice or type of transaction you are doing, there could be some additional mandatory fields which will be required by the e-invoice mandate. Now, if we look at this slide, we can see certain data fields marked in red. So these are nothing but mandatory PIPOL PINT A specifications, but these are not covered under UAE VAT law. Now, what this suggests? This suggests that we might see amendments to the VAT law to incorporate these requirements for alignment with the PIPOL standards. Another important point to note is the mention of a commercial invoice in the published document. This is specifically intended for exempt and out-of-scope transactions, differentiating it from a standard tax invoice. So that's the overall, the fields that we see are mandatory from our tax invoice perspective. I'll now hand over to Vlad, who will run through the impact that this data dictionary is going to create on different businesses. Over to you, Vlad.
Thank you, Navneet. So next, let's talk about how this business dictionary, how the invoicing regime will actually impact businesses in practice. So if we go to the next slide, so just now, Navneet has discussed that a new data dictionary consultation document has been published, which announced 16 user cases when e-invoicing or e-credit note might be required. So this particular slide provides a snapshot of those 16 use cases or scenarios when you may need to use e-invoicing network in order to issue either an electronic tax invoice, electronic tax credit note, or a commercial invoice. And what's interesting to see here is that most of these cases are already covered by VAT legislation, in the sense that normally when a person makes a taxable supply in the UAE, they would be required to issue a tax invoice. When a person exports goods or services, they may be required to issue a tax invoice. When a person imports, they again may be required to issue a tax invoice. So from the perspective of the looking who needs to issue documentation related to VAT, the question is, does the new invoicing regime actually impact the obligations and the scopes to issue cases in which taxpayers would be required to issue tax invoices? So over the next few slides, we'll go through and look at the scope of invoicing requirements. So is there some additional obligations on any parties to participate in this documentation requirements, which may not have been covered under the existing legislation? Also, we'll look at the impacts on practical data gathering and record keeping. And finally, how does it may impact in practice tax compliance and tax administration? So if we go to the next slide. So first, speaking about the scope of invoicing requirements. So we know now that the data dictionary, the new invoicing regime will mandate the issuance of invoices. The question is, does it go beyond the current requirement in the VAT legislation to issue a tax invoice? And the answer is yes. And this comes from two aspects. So the first aspect is that the new invoicing regime will apply comprehensively to all B2B and B2G transactions. So if your business making supply to another business, or if your business making supply to government, you become essentially party to the e-invoicing regime, which is different from what's happening right now, because currently you're only required to issue tax invoice or tax credit note if you're a VAT registered business. But in this public documentation, public consultation document, which was just released by Ministry of Finance, they specifically said that the invoicing regime will also extend to any business established in the UAE, which is including those which are not registered for VAT. What does it mean in practice and from the FTA's perspective? Well, it means that now FTA will have a whole new layer of information about businesses in the UAE. So not only they will know about transactions which are conducted by VAT registered businesses, but they will also know about transactions which are conducted by non-registered businesses. So the businesses which are not part of the VAT tax regime, so to speak. Therefore, obviously, this is type of information which they would be able to use and utilize in order to monitor transactions of those non-registered businesses, potentially monitor whether or not they exceed the registration threshold. And if they do exceed the registration threshold, they may proactively approach the businesses, discussing with them whether or not they should be registering for VAT. There is still a bit of uncertainty, which something what hopefully will be clarified by MOF soon, what kind of documents non-registered businesses would be required to issue. So it is working assumption that they'll be required to issue a electronic commercial invoice, which was already mentioned by Diana and nominated before. So now looking at the right side of this slide, the second aspect, which is different from the current regime, is that under invoicing, you will be required to issue not only tax invoices for standard rated and zero rated supplies, which are known as taxable supplies, but also for exempt and out of scope supplies. So under current regime, if you're VAT registered persons, you're required to issue a tax invoice if you're making taxable supply. In fact, there is an exclusion from the requirement to issue a tax invoice for zero rated supplies at the moment, if you can evidence by other means that all the particulars of the supply. So even for zero rated supplies, we see many businesses do not issue tax invoices. Well, that will change. So for standard rated and zero rated supplies, you'll be required to issue an electronic tax invoice. And for exempt supplies and out of scope supplies, you'll be required to issue an electronic commercial invoice. So here again, we have extension of the current requirements. Currently, exempt supplies are reported in the VAT return, but the law does not mandate you to issue any document in respect of exempt supply. Going forward, it will be the case. For out-of-scope supplies, it's the same. So for out-of-scope supplies, which are treated as outside the scope of UAE VAT, for some reason, well, currently there is no requirement to issue any document. Going forward, this is information which will have to be delivered to the FTA effectively using electronic commercial invoice. So FTA will now have the information about taxable supplies of the businesses, as well as exempt supplies, out of scope supplies. Again, how does it impact, or who does this impact? The main impact of this extension of the requirements will be on obviously businesses who are engaged in zero rated supplies, exempt supplies, and out of scope supplies. So some examples would be exporters, which normally zero rate the sales. So now they will have to issue an electronic tax invoice. They cannot rely on the exception anymore. Supplies made within designated zones. Often this type of supplies are outside the scope of VAT and do not get reported anywhere. Now this type of supplies will need to be reported as part of the commercial invoice requirement. In financial and real estate sectors, a lot of supplies made by companies in those sectors will be exempt from VAT. Well, going forward, you'll have to issue commercial invoice for this type of transactions. Again, and this is everything what will go to the FTA. It will go real time, so FTA will get this information from businesses. As it was previously mentioned, for now, it's only covering B2B and B2G supplies. So B2C supplies from business to customers, from businesses to end consumers, are still outside the scope of this regime, but expectation is that it will change going forward. Now, next slide, please. So moving on, what kind of practical impact this will have in the nearest future for businesses? As you saw before, the minimum requirements for tax invoice actually require you to provide 50 points of data just to satisfy the electronic tax invoice requirements. Similarly, for minimum requirements for commercial invoices, 49 sets of data. If you are engaged in any scenarios which are also identified by Ministry of Finance, such as exports, imports, you may have some additional requirements. So going forward, everybody will need to be able to provide and issue an invoice with a lot of very detailed granular data, including trade licenses of your counterparties, the place of delivery of goods, the place of services, payment due dates. Potentially, they're thinking about introducing requirement to mention HS codes and service accounting codes. So there'll be a lot of data which will need to go into the tax invoices, tax credit notes, and commercial invoices. And what we see in practice is that currently this information is obviously not required and therefore not collected by businesses. And often we even see that information which is required to be collected by businesses often not collected in a comprehensive manner because currently nobody is reviewing invoices that you issue. Your counterparty might review it to be able to validate that it's a valid tax invoice and therefore they're eligible to claim input tax. But the FTA will not know about what type of invoice you're issuing unless they audit you, unless they ask for that information. So currently, the data collected by businesses is often lacking. And going forward, this will have to change because one of the requirements for accredited service providers will be to validate the information which gets to them from businesses. So they will not automatically validate accept information which you're providing. They'll validate it. And if something is lacking, your tax invoice will be rejected, which will obviously result in more compliance of having to reissue that invoice, and also potentially some financial repercussions because as a recipient or customer, you would probably not pay the supplier until you get a proper electronic invoice. So in going forward, it's extremely important for taxpayers to change their processes or improve their processes to ensure that there is proper onboarding of vendors, of customers, and proper tracking and recording of transactions. Because some of the other requirements which will have to be included in the tax invoices is also description of the transactions you're doing, which we mentioned in the scenarios, but also the reasons for chosen tax treatment. So not only it is the data which is fixed, such as trade license or TRN of the parties, but also it appears to include the data where you have to justify that you're, for example, zero rating a supply, or you have to choose to pick a code of why you think that your particular supply is exempt, which is again something beyond which is done at the moment, which is required at the moment. So in addition to just having all this information, you'll also have to be able to justify the information. You'll have to be able to justify that chosen treatment of a supply as a zero rated or exempt is actually correct. Because once again, this is the information which will be received by the FTA in real time. So they will immediately have access to the information. And if they have any issues or questions, it will come back to you. So next. So finally, about the impacts, what are the practical impacts for tax compliance and tax administration? Already discussed that all the reporting will be done in near real time. So as you're issuing your tax invoice, the recipient will receive it at the same time, and the FTA and Ministry of Finance will receive it at the same time. Obviously, with all of this information, which the government will now have, it will need to use this information. And Diana already mentioned that one of the reasons they're collecting this information is to understand the business sectors, how economy is doing, and making big high-level decisions regarding policies. It can be tax policy, it can be financial policy, it can be regulatory policy. Obviously, having this information and this data available to the government really gives it insights and enables it to make decisions at a high level regarding where the country is going. But more practical and what's more interesting for businesses is how the FTA will use the data once they receive it. And from FTA's perspective, obviously, they want to ensure that people are compliant, that there is no VAT leakage, there is no CT leakage, there is no tax leakage at all. Because while currently it is expected that invoicing most closely relating to VAT, but obviously the data which will be received and which will be reconciled by the FTA and analyzed by the FTA can also be used by them to then review and make judgments about corporate tax returns. So it's not only limited to VAT, it can be applied for any tax. So once the FTA has this information and using one of the amazing tools that they have to analyze it, come to conclusion, they can start doing targeted audits. So while they're already trying to do fairly targeted audits, focusing on specific sectors, industries, looking at the revenue numbers, now it can be even more targeted because now they actually have transactional information as part of their data analysis. All of this should lead to improved compliance. So hopefully taxpayers will also, if you haven't taken it seriously, which I'm sure nobody on this call, it's relevant to, all of you have taken your taxes seriously. But for those taxpayers that may have not taken taxes seriously, well, now obviously it's time to start doing it because now the information flows to the FTA real time. Everything what business is doing is pretty much known to the FTA, so it's time to improve compliance and review compliance. At the same time, from the FTA side, having access to this information will hopefully help them to improve some of the processes and some of the interactions with the FTA, with the taxpayers. So just as an example, if FTA knows about expenses of the business on which it incurred VAT, then it does not need to ask for this information from the taxpayer when the taxpayer is asking for VAT refund, as an example. And similarly for other types of applications and other types of interactions between taxpayers and the FTA, now the communication might be a bit quicker, a bit more efficient, simply because the FTA should have some of the data which it requires to come to some conclusions and make some decisions. And finally, which is slightly longer term, but where all this invoicing is ultimately moving is to be able to pre-populate VAT returns. So this is not something what has been announced at this particular time, but the expectation would be that similarly to imports, so when somebody imports goods and goods pass through customs, this information is already pre-populated in your VAT return. Well, now all the B2B data, all the B2B supplies you're making, or RCM imports, which you are purchases, which you are making, the information will now be reported to FTA as part of your invoicing requirements, and this information can also be ultimately pre-populated in your VAT return. When the invoicing ultimately in the future is extended to B2C supplies, then we'll get to the situation when FTA should know all the information about your outputs, and therefore the output side of the VAT return could potentially be completed automatically using the data which the FTA already has. This is again something what is to look out for in the future. This is not a short-term expectation, but this is something what will happen. All right, then maybe let's move on to the next one.
Yes.
Diana, I'll pass
Thank
back
you
to
very
you.
much. Thank you very much, Vlad. Yes, so it was very insightful session. I think there are a lot to just digest with all information you provided. However, one high thing that I want to highlight as well is electronic invoicing is not only for VAT purpose. So as you rightly mentioned, they want to have visibility of all transactions for every single transaction that will generate revenue for the business. So they will be able to know what is the impact on corporate tax as well. So this is not only related to VAT, because this is the tendency to think electronic invoicing is only VAT because it's transactional level, but it will have a lot of impact on your tax deduction of corporate tax going forward. They would say this is not going to, tax deduction will not be acceptable in your corporate tax if it's not supported with electronic invoicing when electronic invoicing will be fully implemented. Also, we need to see the tax administration working differently now. With electronic invoicing implementation in line, tax administration will not be seen as the office working only from 9 to 5. Basically, it will have caused disruption in the way the they will work and interact with taxpayers. As Vlad mentioned, the information they will receive is in real time. Therefore, all the risk, the audits, the discrepancies that they will perceive in the data submitted by the taxpayers will be captured in real time. You will not need to go to the historical data from 2018, since VAT was implemented, and give the data to them, because going forward, we already have all historical data available to them. Now, what companies can start doing now? We've seen a lot of some companies going to find electronic invoicing provider. However, the businesses need to step back and, as Vlad mentioned, check what they have in their systems, check their process. So basically, if we can do nothing, awareness sessions conducted across all levels in the business is important to understand what is the impact in all businesses, the adoption of electronic invoicing. Then create a stakeholders group, working groups for electronic invoicing implementation is important for a streamlined, smooth electronic invoicing implementation. But also, and more important, the first step is to work very close with the tax advisors to understand what is the impact in the VAT, the electronic invoicing implementation, and assess if we have any gaps, if the VAT treatment is correct, are they issuing the correct tax invoice now? What is the process, the impact assessment? What is the assist process to be processed after implementation of electronic invoicing? There are a lot of questions to be asked internally, and this is only working with the tax advisor, you will be able to get the support. And why that is important? Because any data that you will transfer from now on to the tax administration will be in real time, and any wrong data will expose the business to tax audits and potentially tax penalties. So, Vlad, in your opinion, what else your clients currently are doing to adopt electronic invoicing in the UAE?
Diana, so the steps what we're describing here are the necessary first steps. So everybody has to be aware that invoicing is coming, and it's coming for everybody. So it's not that you have a choice whether or not to implement it. It is coming, and it is something what needs to be implemented. So you can already start thinking about creating the stakeholder groups and discussing who's responsible for what within the implementation. And of course, as I say, bad information in, bad information out. So it is very important for businesses to be confident in their current compliance before the implementation of invoicing solutions. That's because if you do have erroneous information, which will be then populated in your VAT returns and sort of VAT invoices, and will be delivered to the FTA and then will be populated into your VAT returns, well, it is not correct because the basic data was not correct. Therefore, you have to be confident with your compliance. So its invoicing project should never be on its own unless you have already done an exercise beforehand when you're sure that your compliance is done correctly. And as I discussed, start getting your information, start talking to your system providers in terms of onboarding, making sure that your systems can also keep and obtain the information which will be required ultimately for populating tax invoices, tax credit notes, and other electronic documents as required by the FTA.
Thank you, Vlad. As per the public consultation document as well, we've seen this is mainly focused on data fields. However, we are expecting the Ministry of Finance to release more technical requirements as well. and documentation regarding a digital signature, for example, how the electronic invoicing going forward will be validated, just to check the authenticity of the document. They will imply as well is the electronic invoicing, the data will be a specific format encrypted. As KSA, they will implement the UUID, what is the identification of each taxpayer, to make sure the data provided by any taxpayer, they will need to make sure is from them and not a third party. And basically, this will avoid to increase tax fraud as well. There are a lot of, this is just the beginning, and we can see there are a lot of changes, a lot of work to do internally first in the business, but also we are expecting more clarifications on, for example, simplified invoices as well. So now for invoices less than 10,000 dirhams, companies need to issue simplified invoices. At the moment, it's not in the scope, but this is a clarification that needs to be done by the Ministry of Finance. Now we are almost conscious of time. We are going to reply some of the questions that we have in the chat. And this question is related to KSA as well. What are the main differences, three main differences between KSA electronic invoicing model and the UAE model, Navneet?
Having worked on implementation of e-invoicing in KSA, what I feel the three differences could be around. One could be around the model that KSA had implemented and what UAE is implementing. So if we talk about KSA, they had more of a clearance model for the B2B invoices and a reporting model for the B2C invoices. And while in UAE, it's more of a reporting model, a DCTCE model, which is more of a reporting model that is being implemented. If I talk about the second part is KSA kind of covered the B2B and the B2C since day one of its implementation, but UAE is implementing more of only B2B transactions as of now. And the third could be around the PDF invoice requirement. So if you talk about KSA, the requirement was to issue a PDF A3 invoice. So a PDF A3 is nothing but a PDF with an XML embedded to it, right? So that was the requirement in KSA. But if we talk about UAE, it's more of only an XML that is required to be sent to the buyer as an invoice. So yeah, that pretty much sums up the difference between what KSA had implemented and what UAE is going to implement.
Thank you, Navneet. Vlad, one more question, just to finalize. I know there are a lot of questions regarding connectivity with the tax administration, and but this question is related to deadline. Are you expecting any delay in the invoice implementation from the Ministry of Finance?
There have been some rumors about delays, but I would not rely on them. So for now, the expectation is that it will be released and going live by Q2 2026, and I think everybody should be working towards that date. Those of you who have been doing VAT for a while probably remember there used to be expectations of delay with introduction of VAT in 2018 because regulations were released only 2 months before the deadline. And it was obviously not the case. The VAT still came in on the date when it was announced. So this should be the working assumption, the working expectations for invoicing as well.
Thank you very much, Vlad. We are just coming to the end of our webinar. And thank you very much, everyone, for joining our session today. If you have any questions, please feel free to reach out to us. We will reply to all these questions that you put in our Q&A section separately. Thank you very much, and the recording session will be available to you. Thank you, Navneet and Vlad, for this amazing insight and your company today.
Thank you. Thank you, Diana. Thank you, everybody.
Thanks, Diana. Thank you, everyone.
Thank you.